is Andreas Papachristodoulou, and I'm a partner at Stephenson Harwood's Athens office in Greece, specializing in shipping finance. It is a pleasure to welcome you today to this panel on shipping at the interplay of global commerce, regulations, and geopolitics. Our purpose today is to explore how global developments translate into day-to-day decisions for ship owners, operators, and insurers across the maritime sector. We are fortunate today to have a panel that represents these different perspectives, namely Ms. Eman Abdalla, the founder and managing partner at SeaThrew, Mr. Mark O'Neill, the president and CEO of Columbia Group and of Scheller Holdings, Mr. Spyros Vlassopoulos, the managing director of Ionic, and Mr. Filippo Fabbri, the CEO of Lockton PL Ferrari. Now let's start with sanctions compliance and the growth of less transparent trading activity. For shipping, the issue is practical. Counterparty risk, voyage and cargo decisions, insurance risk, port screening, and reputational exposure. This is now shaping commercial behavior and risk allocation across the market. Now, starting with the first question, Mark, are sanctions and less transparent trading patterns effectively creating two operating environments in shipping? And what does that mean for safety standards, environmental compliance, and the practical enforceability of contractual obligations?
Good afternoon, everybody. Hopefully, we will have a stimulating debate on this panel. I'm honoured to share the panel with my fellow panelists, and thanks very much to Nicholas and the Capital Link team for putting on today's event. That question is really split into two parts. Firstly, the reference to two operating environments, and the second, the impact of those operating environments on safety and environmental issues. Those of you who heard the speech of Marcus Rubio a few days ago, you will have picked up that he talked about the coming of a new world order. And I do believe very much, I think most of us here in the room that are involved in shipping see this more than in any other industry sector, that there is a real reshaping of the political, the trade, and the regulatory landscape. There's also, in tandem with that, a real breakdown of the international rules-based order. And you've heard that phrase many, many times, but what does it actually mean? We're seeing UN institutions that have been in existence for 60 or 70 years certainly weakening and to an extent coming apart at the seams. We now have, alongside the UN, we have a board of peace. The IMO was perhaps viewed as being slapped down in relation to the net zero framework. So many of these institutions that have formed part of our international rules-based order are coming apart and being challenged. So in answer to the first question, I think it's a bit like sort of the film 50 Shades of Grey. There's not just two operating environments. There's many spheres of influence that will result from this reshaping in the new world order. And how do we fit into that from a regulatory framework and a regulatory approach? Who knows is the answer. I think certainly we've always shown ourselves as an industry to be extremely dynamic, extremely flexible and adaptive. And I think now is the time that we'll have to show that in ever more inventive ways. And really, I think on one of the first panels, I think it was Mr. Farraklas and Mr. Pateras who said, look, we as an industry are very good at self-regulating anyway. We will get there in relation to environmental issues and net zero. And I think in this competing spheres of influence and in this very uncertain regulatory framework, I think we will self-regulate on safety. We will look after our own. We will look after our seafarers. We'll look after the seafarers of our clients. And we will ensure that we comply to environmental moral standards on board our ships, whatever the universal standard might be. So, long story short, I think there will be a number of competing spheres of influence, a number of competing global or competing regional regulations. And I think it's very much the era of partnershipping. It was mentioned on the last panel. Know your clients really, really well. Know your contractual counterparts really, really well. Because in that competing world, I wouldn't want to have to enforce a contract against a partner I didn't really know, a contractual partner in an area of the world that might just say, come sue us here. Take your luck. So I think it's really, I talked about this partner-shipping approach that we certainly have as a group, really, really important, knowing your partners, trusting your partners, making sure they are truly blue chip and of the right moral fortitude, and so that when things go wrong, which things do go wrong in shipping, that you know those partners will stand by you. And that's why I say companies, big companies, scalable companies, are safe havens in this very uncertain world. Companies like Columbia Group and others are safe havens for the smaller and medium-sized operators, where they can hopefully find that certitude or the rules and regulations, the ability to check sanction compliance, etc., that they can't do themselves.
Thank you, Mark. That was very helpful. Bringing in the owner's perspective, Spyros, how do sanctions regimes and shadow trading influence chartering decisions, the level of counterparty risk you are prepared to accept, and vessel deployment on certain routes or cargoes?
Thank you, Andreas. Thank you to the organizers. Delighted to be back here in Cyprus together with this distinguished panel. From an owner's perspective, truth be told, sanction regimes and the rise of shadow trading have transformed chartering from purely a commercial exercise into a calibrated risk management strategy. They influence not just who you charter to, but where you trade, what you carry, and how much legal and financial risk one is prepared to take. From the very beginning, our company made a clear decision not to engage in any shipping activity involving any sanctioned trades of any kind, whether related to price cap cargoes or otherwise. This admittedly has, this approach has served us well. It has supported our approvals with our oil majors and thus resulting in time charters, as well as when divesting older tonnage, we can confidently demonstrate that the company had no involvement in such trades at any point. Now, moving forward, every fixture now requires a balancing freight upside against regulatory exposure, counterparty reliability, insurance validity, as well as financial constraints and reputable impact. We all know that the market has become structurally segmented between compliant and shadow operators, with risk premiums reflecting not just voyages, or voyage distances, but legal and compliance intensity. I've always been a firm believer that ultimately sustainable fleet deployment depends less on chasing elevated rates and more on preserving long-term trading capability and banking relationships as well as insurability. And because at the end of the day, most mainstream owners maintaining access to the international chartering and financial and insurance system is more valuable than any short-term arbitrage opportunity. Thank you.
Thank you, Spyros. That builds on Mark's earlier point. Mark, is there anything very briefly that you would like to add?
Yeah, I think you, to ensure sanction compliance and regulatory compliance in this new world order, in this world of various spheres of influence, 50 shades of grey, you have to throw huge amounts of resources, person power, and money at ensuring that compliance. And, you know, I know from bitter experience in our company, there is a whole department that does just that, checking sanctions compliance. When I was a lawyer all those years ago, I remember clients used to come to us, and I think Spyros was one of them at the time, that used to say, well, can you check out these charterers that we're proposing to work with? Now it's even more important, because this partnershiping, knowing your partner, knowing the moral standing, the willingness to abide by the contract that is signed. Where will you enforce that contract? Will you enforce it in a sphere of influence, or simply say, you know, get lost? You may have an arbitration award, you may have a high court judgment or whatever, but come and get us. That is really, really important. So it takes huge amounts of resources, huge amounts of person power, huge amounts of money, and then really making sure that you can trust the contractual counterpart.
Thank you, Mark. Now let me turn to Filippo. How is the insurance market responding? Are we seeing changes in pricing, coverage terms, and exclusions that now affect even fully compliant operators?
First of all, I would like to complain with Mark because he's cut part of my speech by talking about something that I would like to talk about. Because I'm echoing what he's saying, starting from the second part of your question, is what is a fully compliant operator cost as a consequence of the sanctions? Because even a fully compliant operator, a fully compliant ship owner, because of the reason that Mark was mentioning now, need to have a group of people, a team at work in terms of cost, energy, time lost to check whatever is sanctioned nowadays, that is immense. This is the first things about fully compliant, what is the impact on costs. Second things, the problem is related to the fact that we are insurance broker. We want to have the certainty of the future, and this is something that does not exist. Even a fully compliant operator is never sure about what is going on as a consequence of the sanction. I give you a very simple example. If tomorrow there will be a collision between a fully compliant operator and somebody that is belonging to a shadow fleet that we now estimate around 1,000 ships, probably even more, what will be the reaction of the market? What will be, from my point of view, on P&I and other machinery, what will be the reply? Can we say to our clients, you are fully insured? This is something that is not certain. So these things are something we need to pay attention to. Coming to the question about the cost, I mean, we are almost at the end of the renewal season because the 20th of February is the P&I New Year, and I will say that the impact on the sanction, the shadow fleet, has been quite limited, in the sense that at the end of the day we have seen increases around 5, 7.5%, 8% as general increase for any clients, as not related to sanction. Ale machinery, you know very well, is different and is now reduced, so I don't think that the sanction, the shadow fleet, has an impact on it. On the war side, I think that will be part of my speech today. There will be something to discuss because it's a very price element for any ship owners, and it's something that is quite speculative. I can tell you without running the risk of being contradicted that the war underwriters are earning immense amount of money related to the war risk. So it's something that we, as broker, we need to study and analyze, but maybe I will come a little bit later about that.
Thank you for those insights, Filippo. Eman, how do you balance facilitating trade with increasing obligations around screening, security, and reputational risk?
Thank you. First, I want to say thank you for the invite to Capital Links and to Nicholas. It's a pleasure to be here amongst all the attendees as well as my fellow panelists. So, shipping today, let's agree that we are at an intersection of geopolitics, regulation, as well as capital markets. So what does that mean? That means that with each and every voyage, we are carrying political, environmental, and reputational risk alongside the commercial risks. So which business are we in? Trade facilitation versus compliance reality. We're no longer just moving cargoes from left to right. Instead, we're actually underwriting geopolitical risk with each and every voyage. What has been happening since 2023? You have the shadow fleet with aging tonnage. You have obscure ownership. You have dark AIS. So what has that created? It has created huge risks, major safety risks, older vessels, unclear maintenance, weak insurance, because we're not necessarily talking about tier one counterparts such as Colombia, who we know they maintain ships very well. Instead, we know that we're in an industry that is extremely fragmented. So it's not anybody, those like-minded companies who are sitting in this room today, it's everyone else. Environmental exposure with near-miss spills across the Black Sea and the Baltic routes, in addition to the reputational risks. So that has led to banks, insurers, as well as charterers to require what? Extensive KYCs, voyage-to-voyage screening, and sanction clauses that are practically impossible to enforce once the counterparties vanish into shell structures. So compliance has become an operational capability, not a legal checkbox anymore. Those who cannot screen in real time will simply be priced out of premium trades. And we're all in business so that we can have a viable business, which means that we need to find ways to remain in those premium trades and not necessarily shy away from them. So we already see financing spreads diverging between transparent fleets and opaque ones. Compliance is becoming a balance sheet differentiator, actually. The industry is splitting into a transparent premium market and a high-risk shadow market, and capital will only flow in one of them. Thank you.
Thank you, Eman. Now turning to regulation, shipping is navigating a moving landscape. Global frameworks continue to evolve, while regional measures, including the EU ETS and FuelEU Maritime, already have real commercial consequences. The question for the industry is how to plan and invest when the rule book is not fully aligned. Filippo, how is regulatory uncertainty around emissions and compliance being priced and assessed by the insurance market?
The easy answer is, Andreas, that is no pricing it. There is, not something that we are seeing at the moment. There are few things to comment about that. First of all, the insurance market is looking with interest and is looking in a proactive way for decarbonization. In particular, you see that there are some clubs that are even more involved on that, with all supporting any decarbonization activity. In reality, we need to see also from a different point of view, and the one that I'm interested more about it is certainly there is new technology, new design, and this means new risk. We don't have data at the time to make a proper analysis about what will be the future of these new ships. We know very well that are 50% of the new ships in 2025 will have different type of fuels to be used. It's something that we are analyzing. We are checking. It's too early to say, and certainly the insurance is not pricing it properly. So having a rebate because you have a green ship is something that does not exist in the market at the moment. If you go then, you want to interrupt me, Mark?
No, interrupt, no.
Okay. If we talk about whatever we know now, like EU emission, if we talk about EU fuels, what we need to do, there is nothing, as I said, that is rebate for the ship owner that have a different type of ships. But what we are missing, and is something that we as brokers have to analyze, are the products that are necessary in case of these, for instance, these emissions. If the emission is arising from a casualty, what is going to pay? We need to, the only thing that we need to do in our life, in a career life, in terms of insurance, is analyzing the new risk and support it.
If I can just add to that, I think it's none of us here would have imagined 6 months ago that decarbonization uncertainty was now the most certain of the variables existing out there in our particular sector. And I think one of the helpful aspects of the net zero framework slapdown, and indeed the language that is being used, I must say I shudder whenever I hear our friends in the US talk about dominance, energy dominance. The result of that and the energy insecurity and the need for energy security at least guarantees us for the next vessel cycle that we'll be burning HFO, because we will all need that energy security, and not just for shipping but for other industries as well. So I think it's ironic that an issue that was so uncertain 6 months ago is now perhaps one of the most certain variables in our sector. All countries will have to go for energy security. That means oil and gas, perhaps oil and gas in a decarbonized way through carbon capture, carbon stripping, carbon offset in some shape or form. It can be done, but it will be oil and gas focused with alternative fuels accompanying that, of course, but primarily oil and gas. And then hopefully this phraseology, this terminology of dominance will become less important to all of us.
Thank you, Mark. Thank you, Filippo. Spyro, from an owner's perspective, how do you make long-term fleet, fuel, and vessel ordering decisions when global standards are still developing, but regional rules already impose concrete costs?
Andrea, I think we've heard this before today. If only we had a crystal ball. Truth be told, we've discussed it we've heard about it today, this morning. It's fundamentally a complicated long-term capital allocation. Why? Because a ship owner is making a 20-year asset decision in a regulatory environment that evolves every couple of years, if not quicker. How I see it is that one has to acquire extreme discipline, disciplined optionality, financial prudence, and strategic flexibility. Now, admittedly, easier said than done. Global standards remain under development while regional rules already impose tangible carbon costs, for example. Investment decisions are increasingly driven by risk management rather than technological developments. I honestly believe that the rational strategy is actually not to predict the winning fuel right now, but to preserve adaptability, ensure secured charter-backed revenue, and continue having access to finance and compliant trading markets, as we talked about a short while ago. I'm a strong believer in this world we're all living in. Regulatory agility, rather than engineering certainty, becomes the decisive competitive advantage.
Thank you, Spyro. Mark, operationally, how difficult is it to manage fleets across multiple regimes? And does fragmentation materially increase cost, complexity, and competitiveness pressure?
Yeah, it's a very good question. And that's why I think scalability is incredibly important in this complex world of competing spheres of influence, competing regulation, competing energy strategies. So I think, again, just as with sanctions, it requires huge person power being applied, huge resources, and a global footprint in all of those different spheres of influence, so that we're able to assist our clients with whatever challenges arise. But it does require that particular genie in the bottle, which I think this industry has, and that is incredible flexibility, incredibly dynamic decision-making, and adaptability. And I think everyone sitting in this room, whether you're big, small, or medium size, has that in droves. And that's what makes us extremely able and capable to survive in this very complex world. I sometimes think it's, if ever there was a truism, we are navigating through minefields, literally, and metaphorically at the moment in our sector, and that requires partnershiping and partners of scale.
Thank you, Mark. Eman, how does this look from your side of the market?
Yeah, so first I just wanted to make a few points on decarbonization and regulations in general, because I agree that now we have certainty versus what we had before, but at the same time, that doesn't mean that it has made our life any easier. It's not about choosing the right fuel, by the way, and it's not about having a crystal ball. I think what we need to have, whether as an owner or even as an operator, is to have the right tools in place to make sure that we're able to monitor the ship's emissions on a regular basis. We have the right clauses in place. This is how operators win versus lose. So that's just on regulations. And automated cost allocation as well. Because you can have one ship that goes across Asia, Europe, and the Middle East. That means that ship is going to touch on EU carbon markets, IMO reporting, and regional fuel standards, all with different enforcement logic. And I think this is our issue now. All of these different regulations and with their different impacts. So unless the operator can structurally outperform those that are managing this manually, those are the ones that are going to be left behind. Now, going back to trade corridors and geopolitics, I think we've moved from efficiency-optimized supply chains to resilience-optimized ones. We've recently lived through the Red Sea crisis, the Cape rerouting, war risk premiums, tonnage tightened artificially. What was the result? Freight volatility, disconnected from real supply and demand, rewritten routing clauses, and reliability becoming a strategic concern. And more broadly, checkpoints are now geopolitical leverage tools, such as Suez, Hormuz, and Panama. They're no longer just logistics, they're actually pressure valves. So cargo owners now value route optionality, political neutral tonnage, and financially strong owners who can absorb disruption. So resilient tonnage is already starting to actually command preference in employment and financing. Reliability, in other words, is actually starting to get priced. Reliability is becoming the new premium, and it's no longer just the lowest freight possible.
Thank you, Eman. Now let's widen the lens to trade policy and geopolitical risk. In recent years, we have seen more frequent policy shifts, tariff measures, and changes in trade alignment that can affect confidence, investment, and the stability of key shipping corridors. Even when measures are not aimed at shipping directly, the impact on trade flows and planning assumptions can be significant. With that context in mind, let me open this question to the entire panel. In an environment where major economies are using trade tools and strategic policy signals more actively, how is this affecting commercial planning, risk appetite, and confidence in global shipping corridors? Who would like to go first? Mark?
Yeah, I'll give it a go. Look, I don't think, what are global shipping corridors? Does anyone know? I think the policy, geopolitics, the spheres of influence are changing almost by the week. We talk about EU ETS, we talk about various other emission controls, but does anyone in this room really believe that any of this is for the long term if President Trump continues in the way he's going, in the same way that we all hung on to the net zero framework, perhaps unrealistically? Do we actually, any of us here, believe that the EU will be allowed to have its own policy on emissions? So I think everything is changing. We are on shifting sands, and as I said, fortunately, we're an industry that is very adaptable, very dynamic, and we're making investment decisions in that crazy whirlwind that we exist, clinging on to whatever points, stable points we can. But I think we just have to continue with that adaptability and really adopt the approach of the least disruptive, where we see certainty, go for it. And you know, we're all environmentalists at heart, of course we are. But it would be a very dangerous policy to nail our flags to the environmentalist flag post at this stage, where we have a president that doesn't seem to be of that bent at this point in time.
Thank you, Mark. Spyros, what are your thoughts on this?
Well, I've written a couple of notes. As major economies increasingly use trade policy as a strategic instrument, I hope we all agree that today's global shipping is no longer shaped solely by supply and demand. It's shaped by geopolitics, right? So tariffs, sanctions, different controls, strategic signaling or whatever, now influence trade flows just as powerfully as commodity cycles or fleet capacity. For ship owners and operators, this has fundamentally changed the way we plan. Our planning horizons have shortened. Routes that once looked stable for decades can shift overnight. And a corridor, as Mark said, what is a corridor, appears commercially attractive today, but may face regulatory friction or political tension tomorrow morning. So as a result, risk appetite has become much more selective. We're not only evaluating freight rates, we're evaluating political predictability, if that can be done, legal stability, and last but not least, the safety of our crew on board our ships. So, confidence in global shipping corridors today rests as much on political alignment as on economical logic. When policy direction is clear and predictable, capital follows, long-term charters are signed, and fleets are deployed with conviction. But where uncertainty dominates, we see caution, shorter fixtures, higher risk premiums, and measured deployment decisions. So sustainable success in this landscape demands geopolitical awareness. We all read the news every morning, every evening, and try and understand what is happening, and understanding that a policy decision in one capital can actually redraw global trade flows overnight. It demands diversification across counterparts. And above all, it requires disciplined, forward-looking risk management. So to close, a competitive advantage in today's shipping industry, I don't believe is defined solely by operational efficiency. It is defined by resilience, the capacity to adapt, to bounce back, and to continue trading with confidence in a world where economics and geopolitics are permanently intertwined.
Thank you, Spyro. Eman, would you like to offer your reflection?
Spyro had said mainly what I wanted to say, but I completely agree. Supply chain today is moving away from efficiency optimized to resilience optimized. And we need to always remind ourselves that as an industry, the shipping industry is there to serve other industries, to serve other supply chains. We are the connector. In the past, industries were looking how to move products from point A to point B in the most efficient manner. Today, all of the industries are looking how can I sustain, how can I remain viable, and how can I be resilient despite everything that's happening around me. The geopolitical tensions, new regulations, somebody coming up with a new idea that they all of a sudden want to implement, different tariffs, and so forth. So I think resilience, adaptability, and optionality are the new buzzwords.
Thank you, Eman. Filippo, your thoughts on this?
Thank you, Andreas. I think that obviously I have to reply only from the insurance point of view. From the insurance point of view, we are living a life full of risk, but this is what the broker insurance are doing. And so we are not short of risk. What I believe, and is a criticism a little bit to my industry, is that we are not understanding the real needs of the ship owners now. We need to study more products that are preserve and support them, like trade disruption, like political risk, like war risk. Today it seems that I'm against war risk underwriter, but if you think that is how volatile is this cover, that have 7 days notice with premium that are going up in a way that is difficult to predict, I don't think that in existing world this is something that we need to accept passively and not to consider other alternatives. So I believe that our role, and I'm talking obviously from an insurance point of view, we need to study more, we need to propose more, we need to be more proactive. But I love what Spyros says. I'm a strong believer in the word, so we will do it.
Thank you, Filippo. Let's turn to the final question. In one sentence, what's the single change you are making? Eman, would you like to?
No, I just wanted to add what Filippo said. For a freight analyst, a freight market analyst, the first thing they start looking at is what's happening in all of the other commodities, what's happening in coal, what's happening in iron ore, what's happening in bauxite. And only then they derive insights that can lead them into the freight market and what's happening in supply and demand on freight. So this just adds and complements what Filippo said, that we have an obligation, and you can't understand freight and shipping unless you actually drill deep and understand all of the other commodities that move shipping around it and freight around it.
Thank you, Eman. In one sentence, what's a single change you are making in 2026 to stay resilient and competitive? Mark?
Well, I can't do it in one sentence. I'll do it in 3. First of all, the strategy of partner shipping and the importance of really trusted blue chip partners. The second, that the only certainty in this rapidly changing world is, particularly in relation to safety and in the environment, is self-regulation. And we have to do it for our crews, and we have to do it for the environment for all of the right reasons, perhaps not for the right regulations. We don't know which global regulations apply. And finally, the importance of safe havens in this very uncertain shipping sector. And that goes in tandem with my point about partner shipping, but safe havens, companies that the small and medium-sized operators can go to achieve that certainty in an otherwise very uncertain world.
Thank you, Mark. Spyro?
I'll be much shorter. Stay disciplined and don't rush into anything. You know, we have a saying in our company, shipping is a marathon, it's not a sprint. And in Greek, we also have a saying, "Όποιος βιάζεται σκοντάφτει," which is roughly translated to, whoever is in a hurry falls over.
Thank you, Spyro. Eman?
Yeah, for me, resilience means full digital risk visibility across compliance, emissions, and routing. Because in this market, what you can't see in real time will eventually cost you real money. Thank you.
Thank you. And Filippo?
It's difficult. It's a difficult question. What is a resilience? I mean, what we need to do to be more resilient? I think that to be more resilient, we need to increase the quality of the service we are offering. Only by quality you will do something different from the rest of the world. The risk is there, and increasing our quality in what we do every day, discipline, as Eman was saying, is we needed to change a little bit the mindset. Shipping is not an industry that is an historical industry. It's something developing every day. And what we needed to do is simply to listen more, to understand more, and create more bridges.
Thank you, Filippo. We have discussed three forces shaping shipping today: sanctions and compliance risk, regulatory uncertainty and fragmentation, and trade policy shifts that can influence confidence in global corridors. The clear takeaway is that shipping remains fundamentally commercial, but the operating environment is increasingly defined by external policy and regulatory variables. That reality is changing how the industry thinks about where to trade, what to invest in, and how to structure and ensure risk. Thank you to our panelists for their insights and to all of you for your attention and engagement, and I hope you enjoy the rest of the conference.